What's going on, guys? Welcome to the weekly technicals live session for August 26th, 2018. And just to give you guys an overview of how this weekly technical session will go, it's basically going to be the same as every normal weekly technical session that we have, which, if you didn't know, those take place on Sunday, every single Sunday, typically at 10 a.m. But this morning I had to run to the store and they didn't open until 10 a.m. So just got back, but generally they are at 10 a.m. Pacific Standard Time. So if we go ahead and look at the economic calendar for the week, just to get an overview of the news releases, we have Euro 1 a.m. Pacific Standard Time on Monday, so London session, medium impact news. Dollar index 7 a.m. Pacific Standard Time for New York session. And we've got a couple high impact news events for Wednesday, August 29th. So we're going to be watching the majors here during New York session. And that's really it. Everything else is primarily just medium impact news, nothing too major to talk about. So our primary focus, as usual, is going to be Tuesday, Wednesday, and Thursday. Generally, we don't like to trade Mondays and Fridays because the market typically likes to perform some manipulation Mondays and Fridays, just because that's the week beginning and the week end. So we look to capitalize on the markets in the middle of that, which falls between Tuesday, Wednesday, Thursday. And my favorite sessions to trade are London and New York sessions, so that's primarily where I focus. Okay, so after looking at all that, let's go ahead and we'll move over to the charts. So we know that we don't have any FOMC events. We know that we don't have any NFP events. All good signs in terms of trading, because that means that we could look for setups every single day, because there's no like high impact news events such as NFP or FOMC that would put us off from doing so. So let's go ahead and we'll start with the dollar index here. We'll start with a daily chart. And in the last daily technical session for you guys in the premium group, you heard me mention how dollar index traded up into the 50% level of the quarterly, the 50% of the quarterly level. So that's where we had this high form. So in my opinion, I think dollar index is done in terms of pushing higher. I don't necessarily see them wanting to come all the way back above 97 big figure. So what I do see unfolding is I see continued weakness. And if you guys can remember those 93.20 equal lows that we were talking about for a while, for months now, it seems like, pretty much all through the summer, this is going to be our target. So we're going to be looking for continued weakness in dollar index until we achieve the 93.20 level. Now, once we get down below here, they could potentially, find some support and start pushing up from there. But over the next couple weeks to the next month or so, going into the fall, I'm going to be expecting weaker dollar index, and I'm going to be looking for the liquidity below here, and ultimately below here for my targets. So this week, if you guys look a little bit closely, what we had here on Friday is the market started pushing down, and Thursday's bullish candle here, once the market opens and basically closes below this level, because we didn't close below the open of this candle yet. So if you look, the close of this candle comes in at 95.16 and the open of this candle comes in at 95.15. So we actually closed 1 pip higher than the previous day's open. So in order for us to use this candle here, which is Thursday, August 23rd's bullish candle, we're going to be looking for the daily chart. So this time frame that we're on here, we want to see dollar index close with a bearish daily candle below this candle here. So that would be below the 95.15 level. Okay, if we get that, that confirms this candle as an ICT bearish order block. So right now we're thinking, and it's an idea, that it could potentially be an ICT bearish order block, but it's not valid until we have a daily candle close bearish below this candle's open, which comes in again at 95.15. Okay, well, the low, which is 95.15, the open is 95.17, but we need the daily candle to close lower than this candle here. So as long as we get that, that would confirm this candle here as an ICT bearish order block, which would confirm a potential resistance level for us to look for this market to trade up into Tuesday, potentially forming the high of the week if it hasn't already formed yet, and then we'll see continued weakness from there. So I do not want to see dollar index push back above the high of this candle, which is 95.71. So we're going to go ahead and mark that level out really quickly. $95.71. So have this level on your charts. Now this doesn't necessarily mean that we're all going to be looking for bullishness again, but it has to generally I'd like to see us stay below this 95.71 level for continued weakness. If we get back above it, we could just hang around in a consolidation for a little bit longer. But personally, in my opinion, I think we're ready to go. I think this thing is going to start pushing lower, relatively aggressive in my opinion, because we've got the lower low here. So the bodies didn't close below this low, but we've already formed a lower low. So this low is lower than all these previous lows back here. Okay, then the market had a little reaction, pushed up a bit, no worries, and then next day sold back off. Okay, so this movement in here, I want to see this candle become an ICT bearish order block, and then I want to use that candle as resistance to see lower prices. Okay, so that's going to be my focus for this week. Again, I do not want to see dollar index go back above 95.71. Okay, if we get back above 95.71, then it's likely that we're going to come into this area, find some resistance there, or consolidate, or push back above this high. Okay, so there's a lot more variables that we have to take into account if we get back above this high here. But if we stay below it, in my opinion, we're just going to keep going for the liquidity below here. It's too clean. Too clean for us not to come down and grab that. Okay, so that's what I'm going to be focusing on with dollar index, which should lead us to believe, which should lead us to the conclusion that all of the majors with foreign currency as the base currency, the first pair in the currency, we should be expecting weakness. So just to simplify that, we should be expecting strength, bullishness in Euro USD, AUD USD, GBP USD, NZD USD, pretty much all the majors. We're going to be expecting bullishness. Okay, so we want to see strength in those pairs. So there's really nothing else that I want to talk about in terms of dollar index. We're going to keep this analysis relatively to the daily because you guys in the premium group, you guys have access to the daily technicals, and that's where we'll break down the markets as the weeks going forward, and we'll analyze those lower time frames. But for the sake of keeping this primarily focused on the direction that we're looking for, I want to stick with a daily chart, because if I move down to 4 hour and hourly, I can start confusing you guys by talking about too many different things. So I want to keep it out to a daily perspective, and now that you guys know that I'm expecting weakness on dollar index and strength on foreign currency, that pretty much eliminates 50 to 75% of the work that you would have to do had I not uploaded this video, for example. So what I mean is, what you'll be able to do is, going forward this week, what you want to focus on is buying foreign currency, okay, and selling the dollar index. So for example, if you're looking at USD JPY, that pair should move lower. If you're looking at USD CAD, that pair should move lower, because we're expecting dollar index USD to move lower, and that's the first currency pair of those two that I just mentioned, dollar yen and dollar CAD. We would want to see that move in sync with the dollar index itself. So for those of you that are not in the premium group and that watch this on YouTube, what I would tell you is focus on buy setups in foreign currency, and focus on sell setups with anything relating to the dollar index as the first currency pair. All right, so that's everything for the dollar index. Let's go ahead and we'll go down the list now. We're going to go ahead and talk about euro dollar now. All right, so euro dollar. This was the performer for us last week. We got about a little over 100 pips or so for the week. So if you guys are still in the swing trade, you know that our target is 1750, and we capitalized on the move at 1400 to 1445 for our buy positions. So taking us back above 1750 will be anywhere from 300 to 350 pips, depending on where you guys took your entry on that trade, for those of you that are in the premium group. So I am not still in the swing position. I had my target at 1.15 big figure, which was the low right here, right by this bearish order block. And I did not expect us to get there so early during the week. We actually pushed up and got there Tuesday. And once that level was hit, it took me out of the market because that's where my take profit level was hit, and I was asleep when it got hit. So unfortunately, I was not able to keep my original position on from 1400 big figure, which was what I had mentioned last week in the weekly technicals, where you guys should have been focusing on buying opportunities, because we had an ICT bullish order block here that formed. This was last Friday's candle. Monday opened up, traded lower right into the ICT bullish order block, and then as you could see, we've seen continued higher prices from there. So in last week's weekly technicals, I also mentioned there's a lot of liquidity built up here above 1750. In my personal opinion, I think this is our target for the week. So if we get continued strength above 1750, then we're going to move our eyes over here to these equal highs at 1840. But right now, at the start of the week, today's Sunday, going into Friday, what I am focusing on is finding a buy setup to take me above 1750. I don't care if it goes above 1840. That's just the next target that I'll be aiming for. But for me personally, if I can get on board a move from 1650 to 1750, that's 100 pips. That's plenty enough for me for the week. And that's what I'll be looking to achieve this week here. So there's a lot of liquidity here. I'm expecting weaker prices in dollar index, which in itself means higher prices in foreign currency. When we go ahead and move over to Euro GBP, you'll see how strong that pair is, which is leading me to believe also continued strength in euro dollar. So when we were looking at the markets here on Wednesday in the daily technicals live session, we made a lower low. Okay, so we actually did not go back above this high. So Thursday the market traded lower, and what this was doing here is it was trapping retail traders. So when retail traders see, okay, so we've got a lower high and they start to push lower, they're thinking this market's going to continue lower. Okay, we wait until we have a valid trade setup, which typically is an ICT bullish order block on a higher time frame. That's typically what I'm looking for. So as you guys can see, Thursday we form a down candle, opposite of what dollar index did. Friday we push up, and if you notice, Friday's candle here on euro dollar took us above the liquidity here, and we also closed above the previous day, Thursday. We closed above that open and the high, which now validates this down candle. Thursday's bearish candle is now validated as an ICT bullish order block. Okay, so same scenario, or very similar scenario that we had here during last week's technicals. And if you haven't watched that, I'll go ahead and link it in this video now, so you can check that out, or just go back and watch the weekly technicals video from 1 week, the Sunday before this Sunday that we're doing the recording on right now, which is August 26th. So as you can tell, that since we're back above this high, and we also validated that Thursday's candle is now an ICT bullish order block, what we can do is we can mark out the high and also the open of this candle as potential buying opportunity levels, just like we did last week for the 1400 level, which was the open of this ICT bullish order block. And as you can see, this candle opened up, then we formed the wick, and my entry was on this daily wick. That's how people get wick entries, guys. You have to base everything off the higher time frame. So if I entered here and that's the low of the week or the day, you could see the expansion that we got from there. It's all framed off of a daily ICT bullish order block. Okay, so we got the same thing here. So we're going to be looking for a similar opportunity. We want to see the market, it's going to open up, and we want to see the market. Generally, Monday, we'd like to see it trade lower, okay, and to some level of support. What would that support be? This down candle. Okay, so if we trade within this down candle all Monday, and then Tuesday comes around and we start getting bullish price action, we get a break in market structure, all the things that I talk about to confirm the setup, then at that point we'll know that we could buy this market and target 1750 liquidity. Okay, so let's go ahead and we will mark out the open and the high of this ICT bullish order block here. So the open comes in at 15,969. 15,969. Copy that, and we will do that there. And let's see what the high comes in at. The high comes in at 15,999. Okay. All right, so if we look at the open, it's 15,996, and we look at the high, it's 15,999. So what I'm going to do to simplify this and to reduce the amount of levels that I have on my chart so it doesn't get too confusing when I go down to the lower time frames, I'm just going to use one line, and I'm going to put it at the 16 big figure level. Now the reason I'm going to use 16 big figure is, again, if we look at the open, it's at 1596, so that's 4 pips away, and then if we look at the high, it's at 1599, so it's 1 pip away. So by me using the 1.16 big figure level, which is already an institutional level that ICT talks about, because he says look out for the big figure levels, which is 1.16, 1.17, all that stuff. So that actually lines up with the level, and it's higher than the levels that I'm already targeting. So it's okay if the market trades below this level, because I already know that it should very well find support somewhere within this candle. Okay, now what we're going to do is we're going to mark our 50% level of the ICT bullish order block, because that's going to be the absolute lowest we can see the market go. So if the market goes below that 50% level, then we have to wait until we get that confirmation. Otherwise, we're going to continue lower, or we're going to consolidate. So we need to find that 50% level. We need to put our fib from the open to the close, because when you're mapping out the 50% level, you just want to use the bodies. So it's 1596 to 1537. Okay, and once you have that on, you just get your 50% level, 1.15665. All right, so I'll just make a copy of this, and I will put it over that, and I can delete my fib now. Just let me get the level, 15665. So 15665, and we are going to make this a dotted line so we know it's the 50% level. So now 1.15, what was the level I said? 1.1566. So 1566. If we see the market get below 1566 on a daily basis, okay, so if we see a daily candle come down and we close below 1566, we have to anticipate two things: either a consolidation within this market here, or we're going to run the liquidity below this low, and we're going to come back and retest this ICT bullish order block down here. Okay, I don't want to see that happen. I would like us to stay above the 50% level. So if this pair, for me, the highest probability setup is if we stay above 1566 on a daily basis, and I want to see continued higher prices to 1.1750. So for those of you guys that are watching on YouTube that aren't going to get my signals through the premium group, make sure that you're only looking for buy setups in this pair, and you're focusing your attention on these levels, because you do not want to try buying it if the daily candle closes below here. Okay. Now for those of you guys in my premium group, I will send you the signal as soon as I take the trade, the levels, the targets, the stop loss, all that stuff. So you guys will be able to take part in the same trade as me. I just wanted to go ahead and let you guys know that really quickly. And now we have our levels that we're going to be looking for potential support. So we've got 16 big figure, 1.16 big figure, and we also have got 1.1566, and our target is 1750 for the week. And we already know if we get continued expansion above 1750, then we're going to run the liquidity above 1790, which is basically 18 big figure, and then we're going to be looking for 1840, which will clear up these equal highs. Okay, once we get above 1840, then we have to look at the market again and see, could this be a turtle soup and we start trading lower? Are we going to continue higher from here? All of that stuff. But up from where we're at now, I'm looking and anticipating higher prices above 1750 than 1840. And if we can close strongly above 1840, I'm more inclined to believe that this pair is going to have a much longer term bullish rally to clear up all this liquidity in here. So keep that in mind. This low that we have down here at 1.13 big figure is, like we mentioned last week, more than likely a longer term to intermediate term low in place. And as you can see, we've already seen a nice bullish reaction from there. But we want to see continued bullish price action, taking us above 1750, then ultimately 1840. All right, so that's it for Euro USD. We will go over GBP USD now. And this pair here didn't quite get up into the 1.30 big figure level, which is where we were anticipating. Price has broken through support here. We're looking for support to be retested as resistance, and then look for price to trade that lower. Look for price to start trading lower. So the high that came in was at 29.36. So this pair here, we could trade back above 29.36, but honestly, like whenever we get to Euro GBP, you guys will see that I much rather prefer buying Euro USD right now, just based on the price action we've got with dollar index, we've got with Euro GBP, and even here in GBP USD, right? Just the clearest pair, in my opinion, just like last week, is Euro dollar going forward. Now, if you guys trade other things like AUD USD, NZD USD, all that stuff, by all means, go for it. I'm still expecting higher prices than those pairs. Just the clearest in terms of how I trade, my trading style, all that stuff. And my favorite two pairs just in general to trade are GBP USD and Euro USD. So that's typically where I like to focus most of the time, and that's typically when I send the signals, that's usually what they'll be as well, either a Euro USD trade or a GBP USD trade. So don't ever feel like you have to trade a million different pairs to be a profitable trader. You only need one pair. As you perfect that one pair, you can start to add an additional pair or anything like that. But my personal opinion, I never ever like to look at any more than 3 pairs, and by 3 pairs I just mean like Euro USD, GBP USD, and like dollar index or Euro GBP. I'm not trying to look and cover every single pair. Now, these weekly technical videos, I go over a lot more pairs, mainly for you guys who do not trade the same pairs as me or who may not be in my premium group, so you can also take advantage of these other currency pairs that I talk about. The only disadvantage to you guys that aren't in the premium group is you just won't get the actual signal of the specific trade and the time that I take it and all that stuff. But if you watch these videos, you pay attention, and you put all the levels on your chart, it's definitely possible to do it by yourself. It just takes a little bit longer to actually get to that point of where you know what you're looking for and you're actually profitable. So looking at GBP USD now, on Wednesday we formed the high, and then Thursday we sold off nicely from there. Friday we traded back up, and we retested this candle here, which is technically an ICT bearish order block. Not the clearest or best ICT bearish order block since there's so many up candles here, but it is nonetheless an ICT bearish order block. So we did trade back up into that and formed a nice little high, and then started pushing lower. So this pair here, I'm a little bit on the fence in terms of what I want to do. So I'm not really going to be focusing on trading it, but keep in mind I do expect weaker prices on dollar index, so I think we should get higher prices on GBP USD as well, with dollar index pushing lower. But with Euro GBP being so strong, they can just continue to hold this pair here in a consolidation for a bit, and let Euro GBP and Euro dollar both push higher. So I'm more inclined to believe that cable GBP USD is going to either consolidate or it's going to start dropping lower. What is this low? The low is 26.61. So 26.61 will be my next downside objective in terms of a target if we do keep pushing lower. So let's go ahead and just map that out really quick. 26.61. And we are going to make that a solid line. Okay. So that's our next level of liquidity on the downside. Now we do have these two down candles here. Once these up candles got above it, it does validate these two candles here as an ICT bullish order block. So we do have to anticipate some level of support coming in the market by just this alone. So we're going to see what we get, but that's kind of why I'm leaning more towards a consolidation, because we're not seeing, any like massive strength or anything like we're seeing in euro dollar, where we're making, higher highs and things of that nature. We're just seeing, relatively bearish price action, in my opinion, on this pair here. So we got high, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, potential new lower low. So that's kind of how I'm looking at it. But nonetheless, I'm basically going to be staying away from this pair just to make it clear. I'm not going to be focusing on it, like any trades or anything in GBP USD this week. Now, if something changes, I'll keep you guys updated in the group, of course, and we'll talk about it in any of the daily technicals videos. But let's get away from that pair now, and let's go on to Euro GBP. All right, so Euro GBP, finally Friday, we got that nice little pop up here, running the liquidity back above here. As you guys can tell, with this candle, we just had a little, just a run on the stops, right? So you can tell that it's a run on the stops because notice the bodies of the candles stop right here, right below the wick high of the candle, and then the market, just pokes its head through there a bit, and then it sells off. Where does it sell off into? Right into our ICT bullish order block that we had mapped out. And then last week we outlined this ICT bullish order block. As you could see, market pushed up, traded into that, and used it as support. And then we got an explosive move to the upside. So absolutely beautiful price action here in Euro GBP. And this is why I'm more inclined to focus on Euro dollar right now. So if we look, we've got an ICT bearish order block right here. The low of the candle comes in at 91.16, and right now we're at about 90.50 current market price. So I mean, if you look at this, we're looking at about 100 pips to the upside before we hit any level of resistance on Euro GBP here. So what that means is we should expect higher euro, and well, basically euro is going to be stronger than British pound. So by looking at the two currency pairs, Euro USD and GBP USD, what that basically means is euro, the base currency by itself, should push higher. And then if we look at dollar index, we're expecting weakness. So if you put the two together, that means strong euro, weak USD. It basically translates perfectly into the currency pair Euro USD. So that's my favorite setup this week, is going to be looking for any buy-in opportunities in Euro dollar, because we've got so many things that are lining up with it. It's just it's a very high probability, very likely setup in my opinion. So I like to focus on those. I like to have very minimal risk and maximize the reward as much as possible. And I think with the Euro USD trade last week, and also that I potentially see unfolding this week, is in my opinion the best for us to to take in terms of a trade. So I never look at this pair. Again, I mention this pretty much every single time I talk about it, but I never ever trade Euro GBP. I just use it as a directional analysis. So I look at the pair, I figure out, is it going to go higher, is it going to go lower, and then by using that information, I apply that to the two pairs that I look at myself, which are Euro USD and GBP USD. So just like, for example, if you guys trade dollar yen or dollar CAD, say your primary two pairs that you focus on are USD JPY and USD CAD. So then at that point you would have to look at the cross pair, which would be CAD JPY, and then by looking at this pair you have to figure out, is CAD going to be stronger than JPY, or is JPY going to be stronger than CAD? Once you get that information, you go back and you look at your two pairs, which would be USD CAD and USD JPY, figure out which one of those correlates to this currency pair here based off your analysis, and then you can factor in the dollar index as well, and then you basically have done a full analysis on every single scenario of every single pair that you're looking at. And that's how I like to do it. That's the way I was taught, and it's the best methodology in my opinion for finding those high probability trades that you can trust and not have to stress about if the market's actually going to continue going in your favor, or if you entered too soon, any of that stuff. Alright, so that covers Euro GBP, GBP USD, Euro USD, dollar index. Let's break into the last couple pairs here. We got our dollar yen, AUD USD, NZD USD, and dollar CAD. So we're going to run through these briefly, relatively quickly. I don't like to spend a bunch of time on these pairs because, again, I don't primarily focus on them. But we will go ahead and we'll give our input, and then we'll go from there. So if we look at dollar yen, this pair here is, and I've been staying away from this for a while now because I have not had a clear read on it. As dollar index is pushing lower, this pair is like pushing higher, and this pair has a lot of manipulation in it. The Japanese yen is heavily manipulated, and they can actually manipulate their currency a lot more than like the other currency pairs. So you'll see a lot more manipulation in this, and you won't always see it move directly in sync with the dollar index like it should. So that's just something to keep in mind. But with dollar yen, it's one of those pairs that like I would recommend heavily relying on the technicals, like your technical analysis. Look at is the market making higher highs, higher lows? Is it respecting bullish structure, bearish structure? Like make sure you have all of that information known for this pair if you trade it, because there's a lot of manipulation and you can get caught up, especially if it's consolidating, like kind of like how it is now. So like, just to be like 100% honest with you guys, I don't necessarily know like if this pair wants to continue higher or lower because of where it's at. I mean, we're just in a consolidation. We have made these lower lows here, but ultimately we've broke back up and made a higher high. So this is the kind of price action that we get in consolidations. It's very unclear, it's very uncertain. It's in my opinion, it's not a high probability setup, and if you're not taking high probability setups, you are you're basically just gambling. And that's essentially what I did as I was getting started like in this industry, as I was just constantly look for any pair, and I would say, oh, okay, it's made a higher high, I think it's going to go higher, let me buy it. And I was essentially just gambling. I wasn't framing any ideas or like framing my trade at all. I would just think one thing and then I would react to what I thought, versus like go in the market and actually prove to myself why I think it's going to do that thing. And if you guys really want to see some growth and development in your trading, that's really what you have to do. Test yourself. Go in and actually get the market to tell you the story of why you believe that it's going to want to go higher or why it's going to go lower. And if you notice, when we went over Euro USD, I had such a clear analysis, and there's so much clarity when looking at that pair because of the price action. But when I look at something like this, I'm like, oh, why would someone even trade this right now? You know? And that's kind of like where I'm, you know, trying to give you guys an accurate analysis of it, but I'm like looking at it and I'm like, why would someone even want to trade this right now? You know? So in terms of what I think could happen, there's two things, and I'm not favoring the bullish side or the bearish side more. With dollar index trading lower, we should see this pair trade lower. You do not see that happening at this current moment. So just based off of that, if we do continue pushing higher, what I'm going to be looking for is a run on the liquidity above 112 big figure all the way up into 112.20. So I have the 112.20 level on my chart here because that's the next upside level that I'm looking for. And I'd like to see resistance come in there. So if they do start pushing up higher, I want to see some level of resistance come in at 112.20, because at that point they would be clearing out old high liquidity and they would be trading back up into this ICT bearish order block. And in my opinion, that should be plenty enough for them to want to take it lower. But if we get continued strength, then we have to assume that they're going to run 113 big figure and potentially all the way up to 113.50, which will take us above these highs up in here. So upside 112.20, and if we can start pushing lower, get in sync with the dollar index, we're going to be looking for this low first at 109.80, and then ultimately the 109.50 level here, which will take us below the liquidity here. And as you could see, we had a nice little push up, little consolidation, and then continued push higher. So there's a lot of liquidity resting below here. Anybody who bought this market on this push up, they've got their stop losses below here, and that's where we're going to be looking for as a target if we do get continued weakness. Now again, I'm not going to be focusing on any trades or anything in dollar yen specifically this week. It does not, you know, look like something I would want to be trading at the current moment, and you know where it's at and all that. But if you do, then this will be my lower end objective for the bearishness, and for bullishness, I'd be looking for this up here, 112.20. All right, so let's go ahead and we will drop into AUD USD. Just grab a sip of water. Give me 2 seconds. So, AUD USD, absolutely beautiful. I mentioned this several times for you guys in the premium group. Last week in the weekly technicals, we were talking about how we could potentially want to trade into this ICT bearish order block low here. As you could see, that's exactly what we did. As soon as we hit that level, immediate rejection, and that's nice to see. You know, these are the type of things that you want to do in terms of looking for a high probability setup. Mark out your levels, watch what the market does there, familiarize yourself with it, and that way you can take action on it next time. So now you can see how significant a daily ICT bearish order block is. Once the market trades into it, you can see a nice rejection. Even though this market could still remain bullish, you can see a nice rejection at the daily bearish order block because of the fact it's a daily level. It's a higher time frame level. All right. So after we've seen that rejection, you can see the market trades into these couple down candles here. Find some support. Ultimately does not make a lower low, so we've got a higher low in place now. Good sign here for bullish market structure. But we want to see Australian dollar get back above the 73.80 level, which is this high here. So we'll go ahead and we'll add a line above that, because once we get back above that level, we've basically got the higher high in place. So I'm just gonna go ahead and move this this here. I'm gonna delete that one, and I'm gonna move this. So the high comes in at 73.81. So again, we are gonna use 73.80. Just only one pip before it, no worries there. Alright, so 73.80, if we get back above that, we have to anticipate that we're going to run all the liquidity above this consolidation here. So the market hung around in this consolidation, finally sold off, dropped lower, came back up, retested the ICT bearish order block, nice little rejection, sell off. but ultimately we have posted a higher low. So by forming a higher low, we now want to see a higher high. The next high for us to breach would be here at 73.80, and then we've got the liquidity here at 74.50, and then ultimately back up above 74.80 and 75 big figure. So those are going to be the levels that we're looking for longer term on the upside for Australian dollar. With dollar index trading lower, we should see this pair start trading higher as well. We do not want to see this pair just hang out in consolidation or start pushing lower, anything like that. We want to see the market get back above 73.80. That would confirm our bullish price action, and at that point we can look for any potential buy setups to take us above 74.50 and up into the 75 big figure. Okay, so that is it for Australian dollar. Let's go over New Zealand dollar now. So NZD USD, very similar scenario here. These pairs are very much like Euro USD and GBP USD. They are very similar and they trade together. So for example, if you trade AUD USD and NZD USD, whereas I primarily focus on Euro and GBP, I trade during London and New York. If you focus on New Zealand dollar and Australian dollar, you might focus a little bit more on Asia session, and you would also look at the cross pair AUD NZD. So that's basically the same as Euro GBP if you're someone who trades Australian dollar and New Zealand dollar. So by looking at that cross pair, which is AUD NZD, that will give you the direction of which pair is stronger. Is Australian dollar stronger or is New Zealand dollar stronger? Based off that information, you look at dollar index, get your directional analysis from there, and then you can choose the currency pair that you want to trade, whether that be AUD USD or NZD USD. But you have to put in all that foundational work first by looking at those other pairs, and that's what I see most traders not doing, and they all want to know where can I enter, where's the trade, all that stuff. Well, it lies in the analysis, and if you do the analysis on the charts and the pairs that you look to trade, then you'll definitely be able to figure out which one is a higher probability setup. So with that being said, if we look at NZD USD now, we went ahead, we have the same very similar very symmetrical price action that we had in Australian dollar there. So we made the lower low, we pushed up, we retested that support level, hit the ICT bearish order block here, sold off just for a bit, came back down, found some support here, and then ultimately pushed higher. So we want to see the same thing happen in this pair that we were looking for in Australian dollar. So first things first, we've posted a higher low point. So we've got a low, we've got a high, now we've got a higher low. So now what we want to see is a higher high. So I'm going to go ahead and adjust this level here, and we're going to do it to the high of this candle, which comes in at 67.20. So let's go ahead and put 67.20 on our charts now. And again, make sure all of you guys put these levels on your charts. If you don't, you're doing yourself a disservice and you're not going to be able to see what I see. So 67.20, that's the level that we want to see this market push higher. So we want to see it go above 67.20. Now notice we're at 66.85. So 67.20 is an additional 35 pips from where we're at now. Could you buy it here, place your stop loss below this low and target that high? Yes, of course you could. Do I want to do that? No, because at that point I'm risking 50 pips for a potential 30 pip setup. And you guys know, well, at least if you're in my premium group, you know that any trade I take, I'm looking for 3 to 1. So generally our wins, we're looking for 50, 100 plus pips. Our losses, we take 10, 15, sometimes 20 pip losses, max. I am never looking to close out a trade at like, 60, 70 pip loss. I never do that. I close all of my trades before my stop loss even gets hit. Unless I'm asleep or something like that, then it's a different story. But generally my stop losses are no more than 25, 30 pips absolute max. So with that being said, I do want to see price get above this level here. So now let's bring some things into context, right? So I just said that I wouldn't want to buy it here, but if we get above 67.20, what happens then? this down candle becomes a valid, confirmed ICT bullish order block. Okay, so if we get above that, then we can look for the market to retrace back into this down candle, which should find support. So we should see support come in at 67 big figure all the way down to potentially 66, 60-ish. All right, so 50% of this level would be the lowest we'd want to see it go. Once we get above here, we've got a confirmed ICT bullish order block. All we need to do is wait for the market to trade into that. Once it does, we can target these highs here at 68.50 and even up into 69 big figure. Okay, that's a high probability setup, because then what we're looking at is, if we map out the actual trade, we'd literally be looking at this as a target, so 134 pip target with a stop loss below this daily order block, 86 pip stop loss, 138 pip target. Now, this is just for what you guys see here. In the premium group, we dial in, we get specific, we go into the hourly, we go into the 15-minute charts, all that stuff. So we're not going to have an 86 pip stop loss. But for those of you guys that watch on YouTube, things like that, this is absolutely something that you can take advantage of. Once the market gets above 67.20, wait for it to trade into the back into it for support, and then target these highs here at 68.50 as a target. And then bam, you've risked 86 pips for 138 pip target. You don't have to worry about checking the charts every day. You don't have to worry about where you would enter. None of that. None of that. You don't have to worry about absolutely none of it. All you do, set your target, set your stop loss, and wait and see what the market does. And so for any of you that watch my stuff here on YouTube or completely free, like, that's how I would take advantage of the free stuff that I give out. Because I mean, if you can't join the group and afford to be able to, you know, get access to the signals, then no worries. Watch the free videos, and then, you know, figure out how you can take advantage of the things I talk about. Because each week I'm talking about potential, I'm talking about all these different currency pairs, where between all of them there is anywhere from 250 to 500 pips, and between all of them there is that many pips that you can catch throughout a week's time. And you do not have to be in my group. That's for the people that watch it for free. If you're in my group, you're clearly going to get a whole new wave of insights, because I'm going to tell you everything that I know and how I operate in the charts. Okay? But I'm trying to make it clear for you guys that watch this on YouTube, and I know we're live right now and you guys are not, you know, on YouTube, but I'm speaking because I'm recording this, so the people that watch it on YouTube, I want them to be able to understand, like, you know, just because you're not in my group doesn't mean that you can't take advantage of these things that I talk about. You just have to teach yourself. Like, in my group, I'm teaching you. You're teaching yourself if you're watching my free stuff, and that's fine. You can still, you know, do fine that way. But you have to, like, listen and hear what I'm telling you. So don't just buy it here. Don't just buy it here. Wait till the market breaks above this high, then wait for it to trade in, find support, and then you can look for this as a target. Okay? All right, so that is it for NZD USD. Lastly, we are going to briefly go over dollar CAD here. Then I'm going to wrap up this live session portion for the technicals, and I will stop the recording and open it up for Q&A for you guys in the premium group, so I can make sure to answer any questions from last week or today's video or anything like that that you may have. So looking at dollar CAD now. This pair here has got me pretty much on the sidelines as well, just like dollar yen. We're not seeing much price action here. We're just seeing a lot of consolidation, a lot of up, a lot of down, a lot of higher highs. I'm sorry, a lot of lower highs, a lot of higher lows. It's just very messy. There's nothing clear, and I want to stay away from it. So I'm not going to be focused on any trades with this live, anything like that. But in terms of if we continue lower, which we should, because dollar index is weak, and when we look at this currency pair here, we should see weakness as well. So with that being said, first target level that we're going to be looking for the downside is going to be the low of this candle here, which comes in at 29.60. So 29.60 is going to be the first target for the downside objective, and if we can get some nice continuation below there, and also a daily close below that candle, that would validate this up candle here as an ICT bearish order block. And as you can see so far, we've got an ICT bearish order block that formed here. Market traded lower, pushed back up, traded into that, sold off. We formed another ICT bearish order block here, sold off, traded back up into that, sold off. So we're seeing a nice respect of ICT bearish order blocks, and that's very good for a healthy bearish trend. But ultimately, for me to take action on this pair, anything like that, first things first, I need to see the market move below 29.65 here, which will make a lower low and also give me a confirmed ICT bearish order block here, because this up candle is not a confirmed ICT bearish order block until we have a daily candle that closes below it. Up until that point, it is still just a regular old bullish candle. Okay, so if we get below it, that will confirm it as an ICT bearish order block. And what I would look for at that point is the market to trade back up into that. So this is what we need to see. So I don't want anyone to be confused or just try to sell it here and then, reach out and say, Jeffrey, I sold $CAD, but it didn't go in my favor. Why not? This is what you need to do. Wait for the market to make a lower low. Market makes a lower low. Then you can wait for the market to push back into this up candle. It should find resistance. If this market's going to trade lower, this up candle should hold as resistance, and we should not see the 50% level traded or closed above. If the market pushes above the 50% level and closes above that, we have to anticipate higher prices from there. Okay? As long as we make this lower low, look for a retest of this bullish candle, which would be a confirmed ICT bearish order block at that point. And from there, all you could do is you could place your stop loss above these highs, and then your target would be set for this quadruple or triple bottom, whatever you want to call this. The level itself is 27.53, but I would go ahead and use 27.60 just to be safe. Give yourself a couple pips of room for the spread. So 27.60 would be my target longer term for $CAD in terms of further weakness here. So it's about 215 or so pips. And that could be a nice trade, but we have to get below here for me to want to take action on anything that would be high probability, in my opinion. So I'm going to go ahead and remove this stuff, and I am going to grab a sip of water, and I'm going to close down the recording now, and we're going to move into the Q&A portion.